stock market morning prep video for Tuesday, September 9th. Mixed bag yet again. We are continually consolidating at the upper end of the range for the last 11 trading days, believe it or not. Understand that we have the end of the summer and then we had Labor Day. That's great. And then we come back yesterday to do just about the same. Mixed picture. Dow Jones down almost 26 points. NASDAQ up almost 950. S&P down 6 and Russell down, up $2.18. So a whole lot of nothing. Markets continue to consolidate, and we shall see which way we go. Now, by consolidating at the upper end of the range, this is still quite bullish. And to me, if we don't have a catalyst to push this market lower, there's no reason for it to move lower. Now, it has totally ignored the geopolitical conflicts that are going on around the world. We are extremely overbought, but yet we have no sellers. We have no interest at all in pushing this market lower. Therefore, unfortunately, this is the market that we're dealt with no volatility. And if the market continues to grind higher, unfortunately, we have to look for good quality setups, which will be much less trading than a market that has a lot of volatility in the market and stocks that just continue to move. It doesn't matter what direction, just we need to move, and the markets are not doing that. So what does that mean for us traders? Pick the best quality setups, and if you don't find anything, take a step back. Cash is definitely a position. Now, here's what I wanted to show you. We have the McClellan oscillator here, right? Overbought, oversold oscillator, one of the most reliable out there. We have now came from this area, and now we're back into the neutral zone here. A little negative tick here, but we are still in neutral territory, which tells me that the internals can now move higher and push this market yet again. Now, we are overextended, but that does not mean that our oscillators are telling us that we are extremely overextended, because we're not now. So as we sit here and consolidate in a sideways channel, the markets and the overbought readings on our oscillators are now unwinding into flat to neutral territory. So that's something that you have to keep in the back of your mind. So I wouldn't be just short here. I'd like to see this market pop up one more time, back up to challenge the highs again, and then fail. And that would be a good sign that the markets are indeed pretty much done, at least for the short term. Now, we are coming into some seasonal weakness, supposedly, but as we all know, when you come off of a strong August, you usually get some follow-through into September. So we'll see. We'll just see if the seasonal strength continues here. So now let's take a look at the indexes. Now, here's the dollar index. Now, actually, physically pushing this market higher is the dollar index. Okay, now the dollar index is moving everything else, and it's now gone parabolic. So keep an eye on the dollar index, because eventually when it does start to roll over, the beaten down commodities such as crude oil, gold, precious metals, along with gold, and of course the soft grains, soft commodities, they're going to start to move higher as well. But until this dollar starts to roll over, you're not going to see much movement, if not to the upside, in the gold, crude oil. You're going to have some sideways push up and or down. So it's going to be a lot of noise until this dollar. Now, this is, like you see, this has gone parabolic. So just keep an eye on the dollar. I'd be watching intraday. As the dollar moves higher, equity markets are obviously hasn't really moved, but the commodity sector has really gotten clobbered because of the strong dollar. So let's keep an eye on that. Now we have bonds. Bonds actually came in and got a bunch of emails. Hey, you think we should buy bonds here? No. Why? Because bonds are making lower lows and lower highs now. Could that be the end of the move after that 1618 retracement that we said we determined way back when in early May, I believe it was? Yeah, it's possible. It's possible now. The bonds actually start resuming its downtrend. Now, I think in the long-term picture, bonds are in a downtrend, but we shall see. We do have a bullish falling wedge, which is a bullish pattern. Let's let the bonds start to bounce in and out here into a consolidation, and then see if it takes out any upside movement. Because remember, now we broke down, and now we have all of these moving average resistance here overhead, so it's going to need a lot of work to start to move up. So I would not be looking to play bonds here long, at least at the moment. It is a good strategy when you buy in the dip, as you can see here, and even here we had that little pop again. But now we're really starting to get some larger candles, engulfing candles. So wait a little bit. I like to see it base a little bit before we start to move higher. Okay. Now let's take a look at the ES. 11 trading days sideways at the upper end of the resistance area of 2000. So this is bullish. You can see here we're starting to unwind a little bit of that overbought reading in the RSI. Now, if you look at the hourly chart, you can see that more clearly. This is why we're not moving anywhere, right? This is 11 trading days. We've gone nowhere. So markets haven't gone anywhere. Stocks are not moving. And that's where we don't want to fight the tape. When the markets are doing nothing, that's your cue to take what the markets are telling you. Take a step back. All right, trade. You see a good trade set up, definitely take it. But the activity should be coming from what the markets are giving you. There is no activity. So let's wait until the markets either break out to the upside and fail, or break out and make new highs, or start to roll over here, okay? And then that's where we go. That's where we start looking for some movement here. In the meantime, you're supposed to be doing your analysis by getting a list of good quality stocks, long and short, because we have no idea where this market's going to go, if the market goes higher and or lower. We have a good consolidation at the upper end of the range. That is bullish. We're unwinding our overbought reading. That is also bullish. So the path of least resistance would probably be up, but we have exploded from the August lows, and we have gone up. I believe that was 11 out of 13, 14 trading days, literally straight up. So, you have to also keep in mind where price is. It is a little tricky, but let price lead and then follow the leader. That's what I like to say, okay? Now let's take a look at some of the indexes. Still here at the upper end of the range. The diamonds, we have a double top in place. Here's the 1272 extension from the high to low here in this previous move from August. And this is where we're looking for the 1272 extension to hit the first target. And then, of course, you got the 1618 up here. So let's keep an eye on the diamonds. Transports here, much stronger. It is our leader. It pulled back a little bit yesterday, but really didn't pull back much of anything. Actually made new highs in the morning and then pulled back. Let's see if repetitive patterns continue here by making new highs, pulling back, making new highs, pulling back, and so on. So as of right now, we have a lot of support here, and the transports continue to be well bid up. Also another feather in the bull camp that it is also bullish. So to me, the path of least resistance looks like it might be higher. Now, IWM, definitely the lagger of the two, but we do have a bull flag that actually broke out yesterday. So let's see if this can actually trigger, take out 116.77. Then I think IWMs would move a little bit higher. So you might want to write that little area down. Yesterday's high, take that out, and I think we move higher. Once we take this area out, 117.80, then I think we take a beeline shot much higher. And then, of course, the Qs. Now, the Qs have been doing really well, as you see. Very, very strong. Again, compliments of Apple. Let's see if we get this product launch, and let's see what Apple does. It should affect the Qs, at least in some capacity. All right, guys, let's see what happens here. Hopefully, we can start getting some movement. It is the first full week back, from vacation mode. So it's going to take another couple of days where we have big fund managers, portfolio managers start doing their allocation of their portfolios. Let's see what happens there, and then I think we should get some continued movement. At least a pickup in volatility. That would be a definitely welcome factor here. Okay. Have a great day, and we'll speak to you tomorrow. Take care.